CMQ investors, welcome to the show. This is Chris Franco, and I have an update for you on Charlie Munger's position in Alibaba. And this comes from a question he was asked at this past weekend's Berkshire Hathaway annual shareholder meeting. This question came from a shareholder and it was relayed by CNBC's Becky Quick. Charlie, in the past, you've made favorable statements about investing in China, in part based upon valuation metrics. What is your opinion now, and how much weight do you put on the actions of the government in your analysis? Do recent Communist Party activities in China, including human rights violations, blatant cyber theft from U.S. companies and others, crackdowns on speech from business and media, etc., cause you to change your opinion on investing in China? And how do you evaluate the clear dangers of investing under authoritarian regimes, as recently evidenced by Russian atrocities in Ukraine? And Charlie Munger responded with the following. Well, those are good questions, and there is no question about the fact that the government of China has worried the investors from the United States who invest in China, more in recent months and years than he did in the earlier periods. So there's been some tension, and it's affected the price of some of the Chinese stocks, particularly the internet stocks. Just in the last day or two, the Chinese leader has sort of reversed course on that, and said he went too far and he's going to pull way back and so on and so on. So we're having some hopeful signs. But yes, there are more difficulties dealing with a regime in China than there are in the United States. And it's different. It's a long way away, and they've got their own culture and their own loyalties and so on and so on. And the reason I invested in China, and again, this is, I think, very important for anyone who's still looking to see what Charlie Munger has to say as a way to gauge one of the reasons they're gauging, or one of the ways to gauge their Alibaba investment. So let me start over. And the reason that I invested in China is I could get so much better companies at so much lower prices. And I was willing to take a little bit of risk to get into the better companies at the lower prices. Other people might reach the opposite conclusion. And everybody is more worried about China now than they were 2 or 3 years ago. So that's just the way it is. So not telling us a ton, but I think if I had to take this and apply it, or at least try to use it as a sort of gauge on what happened with the Daily Journal position, I think the situation in China and some of the things I actually mentioned in one of my videos could have contributed to some discussions about just reducing risk, particularly for the Daily Journal portfolio. Now, this is totally skeptical. No one really knows the answer here, and I think there's probably a reason this was not a direct question at the meeting, because like any good investor, any good investment group, you want to keep your reasons close to the vest. Otherwise, people will just copy your positions and, you lose your advantage. So, but what are your thoughts? Do you think Alibaba is still a good investment? I've mentioned before, it's still a very meaningful part of my portfolio. It's about 4% of my total portfolio. It's something I do not plan to reduce at all. I'm confident with where I am now, and you guys can hold me to that. But I'd love to hear your thoughts in the comments. If you enjoyed the video, please give it a like. If you have not yet subscribed to the CMQ Investing channel, this is a place where we're trying to get wiser about investing so we can do better over time. That's what it's all about, long-term compounding. The CMQ stands for Compound Money Quietly. So with that being said, I appreciate you watching. For CMQ Investing, my name is Chris Franco. We'll talk soon.